AMC stock is in the green today by about 1%. This is even as a shareholder is suing AMC. This is over people being elected to the board of AMC without being voted on by shareholders, and AMC also not hosting an annual meeting in about 13 months. So we're going to go ahead and get into all of this beautiful information. If this is your first time to the channel, I don't know where you have been. You must be sleeping or sleeping under a rock, or you just got an internet connection or found out about the AMC Moass that is likely on the way. Either one of those things, that's neither here or there. You are here right now. Hit the like button and subscribe to the channel, but most importantly, comment down below. What do you guys think about all of this information, especially around the court hearing? When do you think it is going to take place? That's really what I want to hear down there. Do you think it's going to be this week? Do you think it's going to be next week? A month from now? Let me know your opinions. Now, with that being said, I'm not a financial advisor. I'm not a financial planner. Do not listen to me. I am some guy talking to you. Well, really, some guy talking to a camera, which sounds a little bit more depressing. So I am just some guy talking to you. Let's go ahead and get into this information. So AMC stock is actually ripping into the close. Very volatile right now. Very, very volatile. Up 1.27%. So you did see a sharp up move towards the end of the day. Last couple candles here being pretty good. After hours, down about 0.5%. Today's a strange day. So you're really seeing everything doing well. You're not really getting like big tech doing well compared to small and mid caps. Everything's kind of doing well today. And AMC, I mean, there's other factors that are at play here. Obviously, we know the court situation. That's the only thing that really matters. Ultimately, if you're expecting the stock to move big, it's based off of that. Now, if you did not see the last video, I essentially talked about how AMC is the most squeezable currently in the entire history of AMC and the Moass so far. Meaning today, there is no other better time you could be positioned for a possible short squeeze. We'll dive into that here later on into this video, but I want to start with this. AMC shareholder sues to force company to hold an annual meeting. AMC Entertainment Holdings shareholders sued the theater chain in Delaware court on Monday, saying AMC is late in holding its annual meeting when shareholders elect members of the company's board. Individual shareholder Kevin Barnes said in the lawsuit that AMC is required by its corporate bylaws to hold a meeting each year, and that its last annual meeting was on June 16th, 2022. He asked the Delaware Chancery Court to require AMC to hold its next annual meeting by August 18th. An AMC spokesperson did not immediately reply to requests for comment on Monday. Delaware law protects shareholders' right to attend annual meetings and gives them the right to sue if a meeting has not been held in the last 13 months. The state's top appeals court ruled in 2020 that courts can deny requests for a shareholder meeting only when there are exceptional reasons. Barnes said in the lawsuit that two of the company's 9-member board of directors were appointed by the company without a shareholder election. He accused AMC of suboptimal governance that has led to frequent litigation by AMC shareholders, including a lawsuit where holders of AMC common stock sued to block a stock conversion plan. A Delaware judge is currently considering a proposed settlement in that lawsuit, which would allow the stock conversion to go forward. At the last annual meeting, shareholders voted against AMC's proposed. I can't read today, apparently. Okay, AMC's proposed executive compensation, including that of top boss Adam Aron. The case is Barnes versus AMC Entertainment in the Delaware Court of Chancery. So this isn't really a huge deal. I find it quite interesting that this is happening at the same time AMC already has the main lawsuit, and I wonder how the courts are going to feel about this. Odds are it maybe pushes them to make a decision a little bit sooner, maybe this so they can deal with what's going on with this new court situation. Now, as far as AMC stock and why you are the most squeezable ever, it comes down to a couple factors. Number one, everyone's bearish. There's not enough money out there, people going long, to make up for the bearishness, meaning that the more and more people you see that are bearish, well, the less they're going to get paid out on the trade, essentially, if they are right. This is kind of like buying at the top of a short squeeze, or when things are rolling over. If you buy at the top, you're probably not going to make that much money, right? When everyone is bullish, that's not the time to be buying. Vice versa. Everyone is bearish and everyone is pessimistic, usually the time to buy. And that is a great example of where AMC stock is right now. Take a look at the option activity today, seeing a massive amount of options, $35 million worth of options, comprised of 46 individual orders from hedge funds and institutions, with a positive order value of 2%. 2%. You will not see anything like this on any other stock unless it is going bankrupt. Like, quite literally, unless it is going bankrupt, you're not going to see this, right? But on AMC, you are. Now, this kind of bearishness that you're seeing would make sense if there was a negative catalyst, and only a negative catalyst. A matter of fact, right now, there's a more bullish catalyst than bearish catalyst. Sure, dilution comes, but what leads to that, what ultimately happens after that dilution? Well, AMC raising billions of dollars of capital at the same time the loss has been narrowing for 24 months now. What does that add up? I mean, they're going to raise billions, and the instant valuation is going to become a lot cheaper. Thus, I think all these hedge funds and institutions kind of have the same narrative. Ride your short positions into the conversion and then cover after. That's kind of the narrative that we've been seeing, and all of them having that same mentality could in fact start a major rally in AMC stock after this conversion actually does take place. Now, I think a rally in AMC is going to start once the judge makes her decision, because at this point, what's more bearish, right? AMC not being able to do this conversion, running out of capital and going bankrupt, or AMC winning the court situation, paying out a settlement, doing the reverse split and dilution and raising billions. Which one is more bearish? Obviously, it's the first one, which would involve the court saying, yeah, you guys can't do this, right? It's pretty clear. Hedge funds, institutions, they won't get that through their brains. And that is to your potential profit. That is to your potential benefit. Now, specifically with the data, why this is the best time to be long in AMC if you're looking for a potential short squeeze, things have never looked better. Estimated short interest of free float at 28%. Now, I've talked about this in a couple of videos, but if apes really own about 400 million shares, meaning there's maybe 100 and so million shares out there, if apes still own about 80% of the float, be a little bit over 400 million shares. Well, you have 145 million shares currently sold short. So really, there could be like 100 million shares trading out there, and there's 145 million shares that are sold short. Really, the short interest of free float could be a lot higher than 28%. But 28% is still by far the highest number that you have seen, period, with AMC. This is up 50% from the level it was at 18 months ago when it was at 18.5%. You're 10% higher now than where you were then. Now, the dollar amount currently sold short in AMC stock has obviously come down quite a bit, about 68.3% over the last 18 months because AMC stock has just went down. That's the simple fact of it. Now, the days to cover is up 311% in the last 18 months. This is a big reason why you are the most squeezable that you have ever been right now. The short score is at 96 because of it. You've never seen a short score this high before, ever, in AMC stock. And I think it's pretty clear why. Days to cover being so high, short interest being so high, everyone being so negative. These things don't get worse from here typically. They typically get better from here. I don't know how much worse or how much more bearish you could really get on AMC right now as far as hedge funds and institutions. That's why I am massively bullish. Again, that's not to mention the cost to borrow fees. Cost to borrow fees across the board, 1,000% or higher. Cost to borrow numbers from Interactive Brokers, 975% at the time of recording this video. Cost to borrow max, 1,030%. Even the cost to borrow average on Ortex is 1,000%. Cost to borrow minimum, earlier in the day we seen 931%. AMC stock is still on the threshold securities list. So I don't really know what else you would want to see if you are someone that is betting on a short squeeze. I don't know how much better the data is going to get from here, right? Sure, could the short interest go up a little bit? I guess so. Could option activity get a little bit more bearish? I guess so, but it's already so bearish, I don't think it gets more bearish from here. So usually when it doesn't look like it can get more bearish, means that you're probably due for a rally, or at least a bounce from the levels that you are currently sitting at when you are so bearish. Now, with that being considered, things in the broad markets also should be considered. If markets are selling off because things such as earnings are bad, at the same time AMC is rising, I mean, that could put some downside pressure on AMC. These things are interconnected. AMC is not on its own private exchange. Now, the earnings picture, like I said in the last video, lots of banks this week, lots of financials, credit cards, some travel, leisure, hospitality kind of names, American Airlines Thursday pre-market, Las Vegas Sands Wednesday after hours. Biggest story is going to be Netflix as well as Tesla Wednesday in after hours. Those are going to be your big ones. And then next week, you're going to get bigger earnings like Microsoft and Google and Amazon, so on and so forth. So those will be huge for next week. Now, as far as economic data, tomorrow you're going to have some big economic data with retail sales month over month coming in at 8:30 in the morning. Now, this is for everyone that has long-term portfolios that you have AMC in it, you're trying to trade it. If you only have AMC, you're probably not going to care about this as much, but I've kind of said this before, and I'll say it again. The markets right now, they don't want to see bad economic data. So you want to see good economic data because inflation has been falling. So good economic data supports that soft landing. If bad economic data starts to come out, well, then people are going to fear a recession and things are going to hit the fan faster than you can throw it at the fan. Now, retail sales month over month for June, tomorrow, you're expecting a month over month increase of 0.5%. This would be an uptick from last month's reading of 0.3%. So you're expecting retail sales to firmly be in positive territory. And if this comes in line with what the estimates are, this is going to be a good thing. If retail sales were to plummet tomorrow, oh boy, watch out below. Things could be falling off a cliff faster than you think. Now, we do have Fed speakers as well tomorrow. Fed Barr speaks at 10 o'clock in the morning. Fed Gibson speaks at 10 o'clock in the morning, as well as some second-tier data related to retail sales. Retail sales excluding autos, industrial production, year-over-year and month-over-month, manufacturing production, capacity utilization, business inventories. Fed Barr, did I say Fed? Fed Barr as well, that does speak at 10 o'clock in the morning. He's important more than not because he's doing the review of the banking crisis. So if he says or really not a crisis anymore, I guess that was like a big stimulus to the markets with the Fed's programs that they open up like $400 billion in liquidity. That's kind of why the markets have rallied. But nonetheless, if he says anything that is kind of different than what we have heard, that could be a negative. Now, as far as in the middle of the day today, at about 11:30 in the morning, you got bond auctions that came out. Now, I've explained this before, but I'll explain it again. The Treasury, the TGA, it's called the Treasury General Account. It ran down to about $30 billion as we were getting close to a default. Well, they got to fill that up. The government's been spending lots of money. Lots of money. The government acts like they have already seen the Moass the way that they spend money. So, what does the Treasury have to do? Well, they got to listen to good old Congress. So they got to start raising a lot of money. They got to sell a lot of bonds. Now, bond demand works as followed. If you, kind of like a dividend stock, if you get paid $1 every 3 months and the stock is $100, well, you get paid out 4% a year because that's $4, right? $4 out of 100 is 4%. Pretty simple math here. Now, if that dividend stock falls to $50, if people don't want that dividend stock anymore, the yield you would get paid if you bought at 50 is now 8%. Vice versa. If that dividend stock goes from 100 to 200, now you get paid 2% a year. So, depending on how the demand is for these bond auctions, that's going to dictate yield. And yields for the 3-month bond came in unchanged from last auction that we seen at 5.25%. Very high still, but I mean, it's not like it's exploding or there's not a huge problem in the bond market. Now, 6-month bonds actually came in a little bit lower. The last bond auction that you got was 5.27%, and this was 5.25%. So a little bit better demand here. A little bit more people actually showed up to this bond auction. Now, What you really want to watch from here is the TGA actually filling up again and what kind of effect that does to our markets, because the Treasury is selling over $1 trillion worth of bonds from now until the end of this year. Still to come, $1 trillion. That's going to pull money out of our markets. How does that affect big tech? How does that affect small caps? I would imagine if you are a long-term investor, though, you probably want to be in small and mid-cap stocks, because after all, Apple alone has a bigger market cap than all of the Russell 2000, so it doesn't take a lot of money heading into small and mid caps to really make those stocks move. And I think we have seen kind of the tip of the iceberg as far as that is concerned over the next couple of weeks and next couple of months. This is likely to be, if this is the start of a new bull market, you'll probably see that broadening out effect into the end of this year, and you really wouldn't want to be in big tech stocks kind of right now, considering that's not really where the money is going to be going. Although big tech did have a good day today, I don't know how long that is going to last. We really need to see earnings, because if earnings are bad, then your big tech's going to fall, because they are some of the most expensive stocks out there in the markets, probably the most expensive stocks out there in the markets. Especially your Apple, right, your Microsofts, these players that are really not growing but have excessively high PE ratios. It's different on something like a Tesla or an Nvidia. They're actually growing like 25 to 50% a year. A little bit different than an Apple that is negative year over year and not growing at all, actually has negative EPS as well expected for 2023, that are just going to the moon and hitting new highs. So those are a couple of the things that I'm currently looking at as of right now. Like I've said before, none of this really matters in the grand scope of AMC. Markets crash, markets don't. AMC stock specifically is going to react to this court proceeding. Now, let me know down below in the comment section when you think this is going to happen and how you think this will affect AMC. I think it's pretty clear. If you've ever been bullish on AMC, if you ever thought a Moass or a rally was around the corner or coming soon, well, this would be the best time to be bullish. And that's exactly, as I expressed here in this video. But keep in mind, I'm not a financial advisor. These things should make sense to everyone out there, and this is pretty straightforward, pretty logical. If you have the slightest bit of knowledge on the markets, you should be able to connect the dots here and figure out why this is such a bullish situation. Hedge funds and institutions, even them with $25,000 a year Bloomberg terminals and all the information in the world, they can call up, billionaires. They can't figure this out. So don't think I can. We'll probably be right, but we'll probably be wrong. I guess that's the best way to put it. So that is really going to be all for this video. Hopefully you learned something. Hopefully you like my perspective. If you made it to the end of this video, most certainly hit the like button and subscribe to the channel. Like I said, if you guys want to come trade with me live in real time, link down below in the description of this video as well. You guys enjoy the rest of your day, and I will see you in the next one.